Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. All right, so yesterday we talked all about what a huge opportunity the Bears had to hold the middle band, to extend, to make that lower low, to go see lower band, to establish this thing as a sell rallies market and everything in between. And they screwed it all up. Every single bit of it. Okay, they came back above weekly pivot. They came back above daily midband. They closed above daily midband, which is a real no-no. So first of all, you didn't get the lower low. Then you end up making a higher low. Now this morning they've come all the way back up, traded as high as 91.75, and they filled the gap from Sunday night. So you can see on the hourly chart, look, it just consolidated a little bit down there. Could never deal with those 33s. Couple looks at 39.5. And then early yesterday morning, that big, rejection from 41.75. So, look, for those of you that have been rooting for this multi-day, move down, and I love those. I love them. They're great to trade. You didn't get it. So we spent most of the day in long in some way, shape, or form. 52.5, and then we got into 158. We held that most of the day, and then in the mid 70s into the close. They pushed it down a little bit last night, but they couldn't really get it done. And then we flipped into a long at 77.5, which we've taken some profits on, and we're still in now. It's a situation for me where, I'll probably have the room book the rest of this setup up here. 91 was something I was talking about in the room most of the day yesterday, just because once you enter that gap, so above 69.75 in this case, I know it's a big old gap, but at the same time, unless the Bears are really asserting themselves where they needed to, over time with the Fed today at 2 o'clock, you could just see all of the tumblers kind of come into place for a walk up. Does it walk up beyond 91? I don't know. Does it need to deal with weekly pivot up at 33.03? Maybe. Hasn't been there this week. That's an area that if you're the Bears, it's Wednesday. You have to defend. If in the bigger scheme of things, Monday, Tuesday, and Wednesday into the Fed was about going up from 32.33 to test 33.03, and then you have a couple of big down days at the end of the week. That's fine. That's very bearish, but that's not what we've typically seen in this tape in recent or intermediate history. What we typically see here is once this slippery slope of buying it starts, and the squeezes start to build upon the squeezes, that we tend to just keep on going. So the next big milepost on that journey is weekly pivot. So you got weekly pivot, and you got the 9-day 33.01. So roundy 3,300, we're back to that. 9-day 33.01. Weekly pivot 33.03. Basically the same conversations we were having last week, we're having them from underneath at the same levels after taking those levels out by 70 handles early in the week. So the good news, the volatility's back. It's a great trading tape. It's really moving for us. It's great. And it's not even bad news that we're not getting the extended downside that people wanted. You can't get bared up and you can't get bulled up. You just have to trade the damn thing. I don't know how many different ways I can say that to people. I would have loved a couple of big, old, fat down days. Those are great. But, yesterday for us, once they lost their grip down at 57.58, forget it. Let's buy. And, 20 handles later. Last night, they lose their grip in and around, 75, 76, 77. Forget it. Buy it. You can always get back short if it's not going to work. into the open today, we talked about the 91 gap fill. You got hourly midband 83.36. Volume weighted average price 84.62. Madonna's in the 86 area. So I expect a whippy choppy open. I am curious to see on a test of 83 if 83 holds. If it does and it takes out 91, that's probably a straight shot up to weekly pivot this morning. What do the bears need to do? Well, convert 83, get back into 76, 77, and then by some miracle try to get back down to daily pivot down there. You can see it on the chart, 68.92. I mean, well, that's a lot to ask for the bears. Yeah, well, they dug themselves this hole. Here they are. We've been talking about that for years. When they dig themselves these holes, it's hard to get out. So, but, here's to a little more of a two-sided market. I hope it keeps up. I would love to kiss weekly pivot, come in 20, 30 handles and have them get into a really nice wide, like 20, 30, 40 handle hourly triangle thing. That'd be great. That's always a perfect trader tape. The Fed's at 2. Don't game the Fed. See what the reaction is. Trade it accordingly. Keep your eye on Roundy, 9-day, weekly pivot, 3,300 to 3,303. All right. Everybody have a great day. There'll be more stuff out on social. Take care. Trade them well. Come see us in the room. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.